Greetings, market rebels. Welcome to this week's sector situations. Actually, Friday, the 22nd of March, but since we usually put these out on 24th, well, I should say Sunday, which would be the 24th, we'll keep that convention for now. Anyway, I'm Wayne. We're going to be getting quickly into sectors directly, and I'm just going to flash our trusty disclaimer. I'm going to flash our trusty intellectual property rights notice, and then I will flash our slide for the week, really, with all the notes from and reminders, really, for me from Macro Measure. So you've got those, but went through those as quickly as I could. I am traveling, so I can't record these over the weekend. I'll be traveling virtually all weekend long. So I wanted to get these done before I headed out. And UOA has been really slow today. So I don't know if everyone's just happy with things or whatever the case may be, but they're not doing much. And so we're just sitting tight, and it actually fits me really well because I do have to travel. So anyway, on that, I'm going to pause the share, just stop it briefly. And we're going to reposition things, and I'll get right into the sector charts. And let's see if I can pull this. So where's my share? Screen 4, share, and that should be going pretty well right now. I'm making sure the recording is still good. Everything seems good. So I think we can get started. But yeah, I think really this will be quick because this is really a status quo type of a week for me. As of right now, with about 43 minutes roughly remaining in the trading week, there's not much to say. I mean, I feel like my thing would be that a lot of these sectors were sort of drug along for the ride. I don't think a lot of them sort of were thrilled about participating. They were really enthusiastic. I do feel like the market's been looking a little tired in some ways. I do believe that there's been a little bit of stagnation. There's been a little bit of distribution, to say the least. I think there have been days where they've used, let's say, days that could have been better to sort of get in the way of bulls and just distribute to some of them. And you've had a lot of arrested situations, but you don't want to really be too critical when your leadership your leadership sectors have all hung in there. You've got XLC, which had failed to break out, and I'll just enlarge that one a little bit. But that finally did it this week. We've been watching it, saying it's really struggling for a while, and it finally broke out. It's not really having great follow through. And this is really, I think, more the breakouts to me were more about the typical, as we alluded to in Macro Measure combined with sector situation the last couple of weeks, new hedgies getting short, new hedgy short positions right in front of the catalysts that tend to allow them to be impaled by the gang. And that's what happened in my book again, right? There were a lot of them thinking, oh, we finally roll over. They made the SMH look like it might roll over right in front of right in front of the FOMC. They had, just like they did with NVIDIA a few weeks back when it was reporting earnings. And then, of course, the rest is history. They just insta-gap it right up, and those guys find themselves in trouble all over again. But they just seem as though they can't ever stop from, I guess, shorting aggressively a little prematurely. And then that really contributes to the next upcycle. Now, some of them help natural buying occur, right? So some of those squeezes only help where there would also be buying. But this one, to me, is a little bit weaker as of now. The problem I think we have with things is that you've got the end of the quarter coming up, and then you've got the earnings season coming up. So maybe we usually have good performance in front of long holiday weekends in the US. That's coming up next week. We also tend to have the presidential cycle in year 4 indicates that there's a rough spot coming up in April and May. So that would be right on target for me. I've been saying for a few weeks that I do think that we probably should see something more substantial in terms of the pullback than we've seen in a while. It hasn't happened. You had the Fed, right, to hold things up, but now you might still have the end of the quarter. I think it would really take news for them to roll the market over in some big way before before Q1's end, because I just feel as though they probably resist that. Anything mild, they're going to try to keep supporting it because it looks the quarter is going to show great performance if you were long these things, and that's usually what the gang is after. So I would be surprised if they let anything happen unless the news is what dictates it. If there's real serious news, that's the game changer in that case. But let's go through the sectors. I would just make a few general remarks, and then we'll take a look at the charts a little bit more up close. I think XLE and XLF have been, it's been really good to see them participate. They were often missing from, prior market bull modes, and they've participated, but they've really become almost like the inverse of a drip down, where it's like mild push, mild push, mild push, up, 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 without really letting any corrective activity happen now for weeks. And that's starting to look tired to me. So I am a little concerned about that. XLE's got, you can see it's got that 74-ish, 73, 74 reading. So that's just one first comment. XTN, that's what, along with IWM, those are my two holdouts. I've been waiting for them to possibly join to say, yeah, these bulls really are ahead of the curve. They were right to buy. Get a lot of people at least thinking that way, that are holdouts. And then that would pull a lot of technically oriented people in to say, look, everything's working at this point. How can you really say it isn't? But we haven't really gotten the XTN to really go. It's struggling to finish the week well. Had a good pop on the Fed, but again, I feel a lot of this was just reflexive. So those are just some general comments I would make. We'll then go through now and make some of the other kind of comments on the larger, bigger picture, view for everyone. Let me just pull another sector up just so I can kind of go through it methodically. That is not the one I wanted. I'll just put this one over here for now. That's fine. If I have to move that, I will. But we'll stay on here, and I'll just start out with XLE. And so we were waiting for the longest time for XLE to finally join the party, and we spotted it really, as it was starting to do its little turn, and then how the turn was improving. And so we have had some good trades in there, but they're not that good. They're not as good as I would have liked. And now you can see the Bollinger Bands are pretty narrow here, but you are out extended. You can see down here, there's a 74-ish RSI reading. The advance is sort of slowed from where it was. Not the worst thing to happen, right, when you're advancing. It's actually good if you can mildly advance for a while, then pick it up again. But usually, right after you've done something like this for as long as it has, there is usually a little bit of a pullback. So I think it looks a little tired. News is obviously a big factor there, clearly. And at times, you've got to know that market really well to be in, day out as trading it. You've got to be all over what's coming out, what's expected, the whole works. But look, it broke out. It broke out back in here and kept going. It's had a decent run. It's just not been that real forceful stuff we've seen before in the energy space. But I would say, look, the trade is probably a little stale right now. It would be ideal to have a nice little pullback that's mild, and then chill things out for maybe a week and a half, and then start to go again. We'll have to see. But if you're looking for any reason to stay in it, I would just put a support line under here, right? If you're saying like, okay, I'm going to trade it as kind of like a nervous bull for now because it's uptrending, it broke out. I do think it's due for a little bit of more than a mild pullback, something a little bit more substantial, maybe like 2 to 3%, kind of like the market major index ETFs themselves. You could start fighting on today's low if you really wanted to. That's probably where I would say is the most aggressive thing. But on counter trend trades, I'm very short. They're very short leash. If you ask me, you keep those very short leash, because if you overstay your welcome counter trend, they can maul you very quickly. You can ask anybody that was short the semiconductors from Wednesday into Thursday. Like, if you overstay just a little bit, they'll make you pay. Just go pull up SMH this week. So that's the XLE. Kind of some commentary there. XLK was the next one down on our grid, and that is not really doing much. So this is a little troubling, right? Because this was a leadership sector. it really hasn't been able to regain that swagger that it had on the way up. It's really been consolidating. You can see that it lost its luster, and it's been really since the whole month, really, you're basically unchanged since March 1st. So you haven't done very much here over the last 3 weeks. That's not an awful thing, right? Because it did take some of the OB-ness out of it. Right now, as a matter of fact, let's see what the RSI comes in at on the daily, and I've got that at about 57. So, that's neutral-ish towards the bull side a little bit. So there's plenty of energy stored up there at my book if it wants to keep going, and it just very well may, but clearly, right, it's got to get through that 212-ish. That's just kind of ballparking it, right? You would say like the 212 area is what we need to see. You get through there, the market's behaving well, TNX still rolling over. Maybe the dollar starts cooling off after it double tops. It's up and away. Maybe they like the earnings, that their earnings expectations are rising, or whatever the case may be, and there's going to be the engineered beats that there typically are, and then you get a more forceful breakout. But as of now, not doing anything extraordinary, but yet not really in a danger of breaking down. XLE, this one did break out, and we said that it's been struggling for a while. It would take a little bit. It finally did put a little move together. Not such a great follow through, right? That's one reason why I'm calling this more reflexive, what they did with the Fed, more kind of short term oriented, more reflexive. I don't think it's been, hey, this is wonderful, now let's really start buying in earnest. It's been more like, okay, we got the initial hedge funds clobbered. It's been great. It worked out as a trade, but are we going to keep buying up here? No, we're not really that interested right now. I don't know. Maybe they're just want to book the first quarter, maybe then make some moves. I don't know what this is all about. Frankly, I wish I did have the time to figure all that type of stuff out. But bottom line is it did break out. It's holding up there for now. Looks a little tired. It is overbought on the weekly, or at 77 on the RSI if I round it, I think somewhere near there. So even despite that consolidation that went on for much of this year. So that's not really that great, right? It's sort of telling you this is kind of where some of my things look a little tired comments are coming from to me when I look at these charts of these different individual issues and these sectors. Just doesn't look as, come on, XLF. Why is it not? I think I'm just really slow right now. So bear with me. But the XLF this is another one to me that looks tired. I saw a lot of paper in banks this week, and most of it was ostensibly bullish, and I was just reluctant to really get too aggressive up here. I feel like this has just been going on and on so sort of methodically, and it was almost like, I don't know. I just didn't have this great, like this is going to keep runaway training to the upside. You're at 68, even backing off 69 with your RSI now, 69 rounded, and you're at 82 rounded on your weekly. So I think this again, like this is just overdone to the upside. And this so many things could really use a nice 3% to 5% pullback to set themselves up for being able to respond with a much better second quarter than the presidential election cycle calendar calls for. But as of right now, it's sort of, from an overbought, oversold perspective, a lot of things are set up to correct. You expect to see more corrective action when things become this overbought on larger, bigger picture charts like the weekly. 82 is no small thing. There's 90s getting registered in some semi areas and things like that. Real estate, it's been a dud, right? Lately, we've been saying that. Thought it could rejoin the party. It tried, and then it just started tailing off. And this maybe sort of coincides a little bit with, I think, yields rising as they had, right, from about this point on, the last, say, 10 to 12 days. And yet, even with the TNX rolling over today, real estate is not really performing. So that's something to keep an eye on, because we have had some paper in there. And it's not behaving very well, and it couldn't fight its way through the short-term SMAs. It's about to lose the 50 with today's, if it closes here. It only has the long-term SMAs beneath there, as you can see. Everything's still fine. It's still far away in my book from real massive trouble. I put it in more as a breakdown below that support line you see there. Maybe you get a little bit of a pullback, kind of like get a single or maybe stretch it to a double. Luckily, if someone doesn't get to the ball quickly in the outfield, but I didn't feel like it was imminent crash or anything like that. More of just a pullback trade, which was a great sector. XLV is doing the same. It's sort of pulling back mildly and lost its luster about a month ago. So, right, there's really not much to report there. It's still above the 50 in gold. So we don't really have anything awful to say about it. The fact that it hasn't participated, not really a great sign. But remember, this can often be defensive. It did do exceptionally well for a while there from the end of October into really the middle of February. So there's really nothing awful about that. It could just be consolidating its gains. It hasn't given that much back. It's still above a rising 50. So for now, everything's fine. I really wouldn't panic in there either until that gets near the 50, which would take, a couple of probably rough sessions to get down to that golden 50 right there. So not really anything special to report there. Not really any great paper or anything, there either that I can add anything on. XLP, this is your staples. These have been doing better, a little bit better than XLY when things were going defensively. But when we get more risk on, they tend to just do okay, and XLY tends to do better. And so this week, a little bit of a stall out, a little bit of a possible mini double top type action in there, but no reason to panic yet. I think you at least have to take out the rising light blue 20 SMA that I'm hovering over before you start to worry about that. And as long as you hold above there and continue to try to rally, you just kind of go with that. You kind of go with it. But I'll say this now, there are a lot of these sort of compound momentum divergences on some of the indicators with similar highs, which a lot of people are going to call negative divergence. And it is, right? But will it deliver anything? It doesn't always deliver something, right? Even if it's compounded, you can see this persist. So again, that's why I'm a big believer in not fighting something until you really feel as though it's ready to crack something meaningful. In this case, that would definitely be that 20-day. But remember, every time you do trade a breakdown or a breakout, there's always the risk that it's false or it fails. So you have to be disciplined about trading that style, whether you're going with the trend or you're fighting it, but especially if you're fighting it. So again, let me just back up to a quick example, SMH. Just imagine, right, if you said, oh, look, this is cracking the support line right here, a day in front of the Fed, which would be really, I think, a little obtuse that you are going to start playing an aggressive short in the biggest, baddest sector that's out there right in front of something that's got the potential to be the massive inflection and usually bullish response of the Fed. And that's exactly what happened. If you were selling here thinking, okay, breakdown, by the end of the day, they reversed it. You should have definitely covered and not taken it into the next day. But if you did, they didn't give you much of a chance to start marking it up. They started marking it up from there, and then they really impaled people that overstayed their welcome with that Thursday action. So that's what I'm getting at about once the breakdown doesn't really follow through, you can't stick around, especially when it's counter trend, or they'll pretty much create a world of hurt for you. Getting back to the X's, right, in the form of XLY, this, though, did catch a bid. So this was sort of a little bit of a canary in the coal mine for us. We were wondering, why is this not acting well? I still hate to say this because it's more, I don't really have technical proof, but it's more or less like my trading experience is telling me this is a little bit more of a reflexive move than it really was legitimate. Hey, I can't wait to buy this now that the Fed's done this. It was kind of that short-term positioning against the gang. In other words, hedge funds getting too short at the wrong time, as usual, and the gang being alongside bias right now. And they really put it to them quickly. It's like everything else, possible again, double top. But look, the things above all the SMAs, all of which are pretty much rising. So you can't really yet say, well, no, this is a double top. I see negative divergence. There even is that. But do you really want to fight it right now? I mean, how many times have we seen these guys use these kinds of SMAs, especially when there's been SMA confluence, to respect it and then make a move from there? So as long as it holds above here, right, you're really shorting into support. If you started shorting on today's low or something like that, that's why I'm saying you have to wait for at least a crack, because otherwise you have to just assume support in an uptrend, especially, is going to hold. So they're back in there. It's a little bit of an unimpressive conclusion to the week as it stands right now, but they did come back into it. Just be on guard. You kind of know mini double top, but above all SMAs, not a threat to crack yet. But if you think about it, it's not the end of the world for bulls. But if you got everything you wanted and, Powell abandoned the last subatomic particles of the Fed's credibility, that some people even still gave it, I think, with, oh, well, we don't really care about the 2% inflation target anymore. We're thinking more along the lines of 3 cuts anyway this year. That kind of nonsense, really, because the rhetoric just doesn't match up with what they've told you in the past. Right now, we're going to do this, even though we've said this many times in the past. That's how you lose your credibility, right? When you say one thing and consistently do another. But again, I don't know how anybody assigns or any credibility to that organization at this point anyway. Whole nother topic. But just look, XLY, it is what it is right now. You're not a loser if you're a bull. You're certainly not a winner if you're a bear. You need to start to see it re-engaging to get long it, and you can't fight it yet until it starts to show some signs of a breakdown of something, and it just hasn't yet. I mean, it's above all of them. So I think at this point you'd have to wait for it to break the 115. I'm sorry, the 15 SMA near 180.92, and then you still have the 50 waiting for you. So again, it's a little kind of picking up as a short right now. It's more of a pennies in front of a steamroller pickup. You're looking for a single that you maybe can stretch into a double, and that's it, unless there's news or other market developments that suggest that it will crack in a bigger way. That would be rates screaming back up, the dollar probably screaming, things like that, right? Maybe maybe that kind of a thing, along with poor international developments or whatever the case may be. But without that, right, it's really hard to say, yeah, this is going to crack even the 50. XLB, basic materials, despite like the world really not, in my mind, being really on fire in terms of the economic engine of the world economy. It doesn't really matter all that much, right? As the way these guys are looking at it, they've managed to create a new high here yesterday, backing off small. Probably could use the 10-day as your aggressive short, right? So in white there. So that's 90.98. You want to short it beneath there, say, look, this was sort of like a little bit of negative divergence on that second high, even though it was higher. We did get higher oscillator readings. I get all that. But again, don't overstay your welcome. Even if you do catch the downdraft, should there be one, you still have to get a quick trim in my mind. The quick trim in my mind is selling something between, let's say, 1, 2, maybe 3 of your 10 lot that you buy as a base to use for how you like to approach things. Get a quick profit in. That way, if they reverse it back up, which they often do, to your trigger level, you just get out of the balance and you get ready to reload or maybe go with the trend in the opposite direction from where you had been. But I don't like overstaying my welcome, because I got beaten when I first got started. I got beaten on that way more than any intelligent person would have ever gotten beaten. There, just to give you a clue, like I kept thinking, like there's more downside here. Nope. Trend persisted a lot longer than I ever thought it would. So I overstayed my welcome enough to know not to overstay my welcome. Market taught me that long time ago. Those were some of my earliest worst trades. Look, XLI, same thing, right? Wow, hey, everything looks great. Industrials are roaring, but they are. I mean, they even made a new high today, not finishing strongly, but you need to go all the way down to the 20 at 122.17 to have any trouble there either, right? That this trend would maybe crack at some point. So it's ways away. Now, could you get a pullback from the breakout that started on Wednesday? Could you get a pullback maybe to that former high here, find support there, and then go again? Sure, you could. I would maybe look to that if it does stay weak, look to see if it can hold near those former highs. And I would put that at about 120. What's that? 123-ish, roughly speaking. So right near there, pull back a little bit, hold, and then go again if they keep the market going. But there's really nothing bad. What can you say about something that's making a new high in the face of everything, I think, but it is what it is, right? There's nothing negative to say about that. It even has, a new high on some of those indicator oscillators. XLU, we check, it's a perfunctory check, but sometimes it matters. It has mattered a little bit recently because the trend did change in there a little bit for a change. But that too, you would think, right, that would do a little bit better if rates are rolling over, but it is not. It's sort of struggling, right? But that's very XLU like, not to do all that much. We like to look at it really as if they're bidding that up, then why? Because that's almost like it's almost like a UOA thing. Why are they buying the utilities in a big way? That's not normally where the money goes, right? But they'll go there if rates are dropping, and it's better for profits, and also to sort of put money into something defensive. So we covered all that. Let's go to some of the other things that we look at typically. We'll take a look. I'm just going to do this quickly. Let's take a look at the oil future first. And that did back up, and the dollar's, really having a strong couple of sessions in a row. So the dollar maybe not helping, oil off a little bit, but look, it did break out from a range, and now it's doing what we just talked about, where it did come back to former resistance, and maybe if it supports here and goes right, that'll be the sign that there's likely more upside for this to continue to explore. And so keep an eye on that it doesn't sort of sink right back down into the quagmire of all these SMAs back into this range. If it doesn't do that, that's a good sign for oil. If it does do that, that's obviously means it's going to be harder for it probably to pull itself out of that muck, ultimately. Now let's look at copper, another commodity we check out, just to see. And this is similar, right? Because we're trying to see if this means something. Hey, like they're bidding copper up. That's a good sign. They call it Dr. Copper for a reason. When copper's, in demand, that's usually a good sign for the global economy, or at least the domestic potentially and global economy. And it was doing better. We did kind of finally have to note that. We noted there was an inverse mini head and shoulders in there that did fire to an extent, but it has pulled back. So we need to see it do more, kind of pull back to the breakout area, general vicinity. So now it bears watching, much like the XLE, right? Does it kind of get pulled back into that former range, and that kind of negates the good recent work that it did? Or does it hold here or near here and reverse and go higher? A couple areas that are also interesting. XLRE, we talked about that a little bit earlier. Now that did start to look a little rough, I think, and I think I do have, or I think I might have it in IYR. I think it's an IYR now that I'm thinking of it. We have an idea in there that's on the bear side, an IYR, and we're waiting for that to maybe break down a little bit more. But we have to note, right, that the trend, it sort of broke the short-term trend there. That it lost that support. It's now underneath there. The SMAs are getting in its way. I could see a little bit of trouble now that this really failed to keep going. There was paper, obviously, for UOA for me to even enter the trade in the first place, but it's really not. I'm not looking at that as a massive, this whole thing's going to fall apart. Now it could, but I'm just saying that I looked at it more as a mild pullback type of a put idea to get into our log, to have something to go to in case, for whatever reason, we did get some bearish behavior here and there. But that's struggling a little bit. But the XHB is certainly, it really hasn't been struggling. The last I looked at it, it was making new highs. And so just keep that in mind, that despite everything, again, I say it every week, but despite everything, somehow this thing just keeps grinding higher. Probably the best example, I say it almost every week, but probably the best example of exactly why I do not trade my opinion. I got cured of that 30 years ago a little after I got started in the business because my opinions are usually pretty good longer term, but in the short run, they were horrible to base my trades on. So that's why I became so dedicated to charting because for timing and risk management and expectations and all the rest of it, risk, all the things that you can pull from charts, I find them a lot more practical and reliable and dependable and well, they repeatable in terms of behavior and so on and so forth than my opinions ever were, and at least in the short run. So this has been uptrending. It's been strong. It's been relentless. And so every now and then we threw a little pullback type idea in, but not because we were motivated because we hated the sector. It was more of it looked like a little pullback had set up. But that's why if you're still one of those people that likes to try to meld their opinions, hopefully your opinions are much better than mine are in or at least were in the short run. But this is why I don't do it. I talk about it every single week. That if you ask me, it just makes no sense with mortgage rates having screamed up, being very high relative to where they were, and housing prices being inflated, all the consumer items being inflated, wages not keeping up with that, and somehow, right, people still can't get enough of housing at these levels. So to me, it's not really long-term sustainable. But again, it proves that what do I know? Number one, and number two, it proves that you should just, I think, just stick with the chart, what the charts are telling you. And the market was saying, we're not going to let this thing go. And they didn't, and it just kept going. And then again, there's another example of trends persisting a lot longer than a lot of people, myself included, would have ever expected. So that's not other than it's backing off today. What can I say negatively about that? Nothing. XAU, we kind of already did talk about this. We said the reason why it's probably struggling, right, is that you've got a dollar the last couple sessions that was really roaring. I think they like the idea that the Fed's going to go back to easy street sooner than later. That was the initial reaction. But because the dollar's powering, that's why I think this thing is having a rough couple of sessions. You'll see the dollar looking pretty, oops, it should be dollar DXY, my bad. But that's why this looks good and why XAU looks bad when I can finally bring this up. Come on, things are slowing down for me bad, as you can see. Well, it just keeps taking a four and not, I'm holding the cap down, but it's not taking there it is. Let's get this DXY charted. But so that, yeah, so there you go. It's been a pretty strong couple of sessions and moving up towards right after this corrective phase that it was in. So let's just trace that out. I'm not going to put too much on there. And I don't even really like using these, but let's see if they come in handy for us here. I don't know if this automatic channel drawing situation will work. Let's see what they do. Wow, there's really a delay. I hope we don't get chopped off here. Yeah, it's not drawing the channel ideally the way that I wanted it to. But anyway, you get the idea. Uptrend in here. I'll just use the pointer if it lets me. Uptrending kind of broke out of the down beyond the downtrend trending channel, went into this corrective channel. It was only corrective because it didn't take out the lows. Now it's working its way back up. So I don't think this is a great thing for stocks overall, but again, it probably needs to really, just like TNX failed to take out the high that we saw earlier, it really needs to take out these highs in mid-Feb for it to really begin to worry probably people in a big way. And then wondering why that's happening and so on and so forth. So that would be just kind of the bow tie for that whole thing there. I'm trying to think if there's anything else we should really bring up that would be helpful, but I hate to say it, but it really is more of a status quo situation where is this the one nope. It's more of a status quo situation for us where there's nothing that's imminently breaking down. Most things have moved up. They're kind of hesitating here. You don't know if it's completely OPEX. It's just they're tired. It could be a combination of both of those, obviously, but there's really nothing to say anything bad yet. And I feel like they the bulls, I think, would do themselves a big favor. It would not be fun for us, but especially the momentum services. But if they were to take next week's holiday week and just turn it into a nice hold, right, where they just let things sort of churn around, kind of take some of that short-term overboughtness out of it, and then that might set them up for at least maybe trying to weather what could be a little bit of a storm after Q1, the way that the calendar calls for it. But that's sort of getting ahead of ourselves. I have no idea if that's going to happen next week. That would be the way that I would handle it if I were trying to handle it deftly as a bull. I don't need to really tack on any more gains and force things higher right now. I could almost just let kind of be like a buyer if they start selling, get better prices if I'm really truly a bull, not let things fall that far, correct in the short term. A lot of your oscillator readings will come down after 4 more sessions of that kind of behavior, and then you set yourself up to really have maybe a better start to Q2 rather than ending the opposite way, which would be to push your luck even further, really goose things, and then give people a reason to really follow the calendar as we roll into April. So on that note, I think I'm going to wrap it up. I do hope something that I shared in this week's videos help you out. Had to record them here today to get them out because I will be traveling all weekend. I want to wish everyone a great conclusion to their trading day. I want to wish everyone a great weekend and a great holiday shortened week ahead, and then a great holiday weekend the following weekend, because I probably will not be recording until we get into that weekend. So everyone take care. Thanks again for tuning in.